Welcome. Godfrey Carey, Stock Market Mentor. Monday nights, November 18th, 2024. How are you tonight? I'm going to talk about some stock market stocks tonight. Got my pencil and my journal. You guys take some notes. Got some golden nuggets for you. Welcome tonight. If you're subbing, you can come up, ask questions. Welcome, name and user 19318. Benny Hughes, King KG, welcome. Guys, give me some taps, give me some likes on that screen. Just get those likes to about 1,000. Get some people in here. I'm going to start taking any questions in about 10 minutes. If I miss your question, just put it in again. I can only go back so far. I will take a look at your stock for you tonight. If you have a stock, put the symbol in there. The market was flat a little bit today. Let's see. Down 55 to 43,389, which is kind of flat on the Dow. There was a few key stocks that were up. I want to tell you, Apple was up 3 to 228. Costco was up 12 to 919. You got Costco investors very happy. Costco's head towards $1,000. See, I follow about 50 stocks or so, but I really focus on 10. You guys want to focus on about 10 stocks as your key stocks. Call it a core 10 stocks list. There's DoorDash, 172 up 3. Because I'm taking any pictures. The QQQs were up to 500. I think the Qs will outpace the SPYs maybe this year. NASDAQ was up 111 to 18,791. Oh, look. Netflix up 23 to 847, all-time high. Hello, Netflix. Hello there. You guys, I'd rather you have one share of Netflix at $800 than 800 shares of a dog shit penny stock that's worth nothing, that goes nowhere. What else? Reddit is up 4 to 129. I think that's also an all-time high. Roku up 5 to 74. You guys don't keep an eye on Roku. Headed towards back 100. Skechers. SPYs are up today a little bit. Ooh, look at this. Tesla up 18 to 338. Hello, Tesla. S&P 500 was up 23 to 5,893. Trump stocks, DJT up 468 to 3278, coming back. Yeah. IONQ. Oh, the quantum computer stock, it dipped today. I was showing you guys a picture. Okay, we wrote cover calls on this, right? IONQ is showing $25.23, down $3.91 today. Quantum computers, the main game in quantum computer stock. I have here something for you. Here's a trade for you guys, okay? You guys who are doing cover calls, I'm teaching you. Also for the pros who are already doing it. Earlier today, we had the quantum down about $5 near the open. And when this happens, you have a cover call. Your cover call also comes down, which is a good thing because you sold it, you're short. So here I'm showing, take a picture, guys. Here I'm showing -1 cover call on the December 24th, that's next month, 25 strike, and then January, this is going way back, 2026, the 30 strike. Now, it's showing a profit of 1,500 and 600, and that's because when you're on a cover call and your stock dips, okay, your cover call actually, you lose share value, okay, that's your investments coming down, but your cover call goes up, which is to say that you sold your call at a higher price, you buy back lower. So what you could do, you could close your cover call on a dip, which is what we did today. It doesn't show you how I closed it because it only shows -1, but I had -7 for 700 shares. And it's just showing one, it's showing -1, -1. But I closed 5 actually contracts. So when the stock swings up, you write the covered call, get the maximum premium. And then when the stock dips, in this case, you buy your cover call back, okay, for less. You control your shares again outright. And that is a simple example of a trade, and you pocketed some money there. And when the stock swings back up again, you can write the cover call once again. You can do this. I've done this 3 times in the same month. So when I'm showing you how to get 5%, 10%, these cover calls a month, we can actually improve that by buying them back when the stock dips, buying back for less, and then when the stock swings back up, it's selling them again. That's a cover call trade. I want to show you guys. Take a picture. That's what it looks like. Get your calculators out tonight. Do some math. Questions? Take a look. Appreciate you guys giving me some questions. Thanks for the likes. Appreciate you. We have some people in here. Give me 2 shares each. Just share in the bottom corner. Send it to 2 people. Get some more people in here, guys. Appreciate you. All right, questions. OKLO, SMR. Are those 2 stocks? Not familiar with that. OKLO, SMR. Take a look. Are these stocks, was it digital footprint? Okay, let's take a look. There's like 7,000 stocks out there, considering the NASDAQ and the New York. I don't know a lot of them. I know most of the big ones. Click on research, you guys. If you don't have an account, open it at Schwab, Charles Schwab Broker. OKLO. OKLO Class A. Electric utilities. OKLO. And then SMR. Is SMR stock also? SMR. New Scale Power Corp. SMR. These look like dividend companies. So OKLO is $20.25. So a low share price, not ideal, but it was up to 67 today. And that says electric utilities. OKLO Incorporated designs and develops fission power plants to provide reliable and commercial scale energy to consumers in the United States. It also provides used nuclear fuel recycling services. The company was founded in 2013, based in Santa Clara, California. Let's take a look at the 5-year chart. Yeah, I'm not sure what's up with this stock. It looks like it's hovering around $9. It started, I have 2021. I don't even have 5 years on this. And it started moving around 2024, like a year ago. I'm going to say, so it doesn't have a 5-year chart, so X. No robust share price. Like to have like $100, $200, $300 a share, X. Let's look at the volume. 34 million, so it has a volume. Check. Let's see if it has PE. Is it showing a PE? No PE. OKLO. X. Dividend. Let's have a dividend. It has no PE. I don't think it has a dividend. No dividend. Yeah, I don't think it's happening. This looks like a newer company. We have to see where it goes. So X. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, and then 6. Let me see if it has a cover call. Probably not. Let's see. A lot of volume though. Let's see. I'm going on next month. Look at the stock. Pull up the option chain, and it is November 18th. So I'm going to go December 20th. 31 days. Take like $20 a share. 2025. I have a cover call. Someone's betting on this stock. It's showing $3.20 at the money, which is huge. On the 21, it's showing $3.10. On the 21.50, I would sell the 22. Okay, buy the shares in here. 2025. Sell the 22, which is $1.75 higher, so you get the share growth, and you're gonna get $2.65. Whoa, nice. Let's do the math, guys. Premium $2.65 for your shares times 100 shares, and divided by share price of $20.25 equals 13% cover call. Whoa, 13.08. Nice. Thanks for that. Well, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. I'm sure it doesn't have stock splits. I'm gonna do, out of the 7, it only has 2 X's, which is volume and cover call. Out of 7 criteria, I can only give you 2 X's, so it's a no-go. But if you like the stock, it's a newer stock, newer company. It's giving 13% on the cover call, so you could technically make 130% per year if it can maintain in price. I don't know if it will. So that's worth something. Let's jump to SMR. I bet it's a similar thing, I'm assuming. Was that digital footprint? Thank you for these. This one's 27, NuScale Power Corp. NuScale Power Corporation engages in the development and sale of modular light water reactor nuclear power plants to supply energy to electrical generation, district heating, descalation, hydrogen production, and other processes, heat applications. I didn't check the market cap on the other one. Let me bring that up again. OKLO. Just write it down, OKLO. The market cap was, I'd like to have 50 billion, 2 billion. It's a tiny, tiny company. So you're not investing in anything big, okay? So back on OKLO, I only have 2 check marks out of 8 criteria. And then back on this one, on SMR, this one is $27. Same kind of industry, 2709. New York Stock Exchange, volume is 13 million, so that has a volume check mark. No robust share price. I'm going to assume doesn't really have a 5-year chart. It looks like it's started to move in 2022. So no, X. No robust share price. Does it have a PE? PE, no PE. X. No dividend. No dividend. X. I know that doesn't have stock splits. And does it have a cover call? Probably, right? What the hell? Let's check it out. Option chain. You guys, you need a stock market account to do trading. Go with Charles Schwab. December 20th, go 1 month out. Buy the shares here at $27, which is $2,700 investment. Yes. So these are cover call stocks, guys. All right, so at the money, the 27 is paying $3.90, which is excellent. So maybe sell the 29. Yeah. Sell the 29 cover call for $3, which is awesome. It says 3 by 350. That's a huge gap. Maybe put limit order for a little more, but let's just say $3. I don't want to push it. So this is the math, guys. $3 cover call, $3 divided by the investment of $27.09. 11% return on the cover call. Okay, so thank you for these two cover call stocks. I just got a check mark on the volume and the cover call, but everything else I'm looking for is not there. So risky investment. It's the best I can do for you. Appreciate that. Questions? Thank you, guys. Thanks for coming. We're going to go for about an hour. We're here every Monday night looking at some stocks, looking at some trades, answer some questions. If you're subbing, it's only $5 a month. You can come up here, talk with me. And I'll always take care of my subs first, guys. I'll show you these trades. I met with you at the Rehabilitation Center in Beverly Hills. Jonathan Meza. What's up, player? You met Godric back in the day? Back when I was working? Dang. So, Jonathan, you had a question for me? Appreciate you for joining. 21 sell put on November 22. Oh, by the way, when we're doing cover calls, guys, if there's heavy volume and there's a heavy, a high price call option, which it was with these two stocks and other stocks I'm showing you, you can also sell the put. Okay, so what that means is, if you look at the option chain, let me see if I can get an option chain for you. Option chain here somewhere. Do I? Okay. If you have an option chain, the calls are on the left side, the puts are on the right side. I'll show you. Like this, okay? And you'll see that this is IONQ, not today, but I think on Friday, before it dropped. You'll notice that puts are also very expensive, so you can actually sell puts, which is similar to a cover call. It's also a long position. You want the stock either to maintain price or go up. With the put, instead of agreeing to sell the call at a higher price and getting paid for that, you agree to take the stock if it goes down. In my strategy, I do the put out of the money. So let's say you have this stock here. It's showing 29, okay, before it dropped. But like if you look at here at the 30, it's 580. So I would probably sell like the 25, which is out of the money, and you're getting 288 for that. So it's like 10% return right there on the naked put. So you can sell the put or the call, similar trade, similar money. The put actually gives you a little more money because if you consider that you don't take the put unless it goes down. You don't take the shares unless it goes down. So you have a higher return for a similar premium because in this case you're buying a cover call. I got to pay $29 for it, right? But when you do the naked put or the covered put, the shares prices are generally going down out of the money. So in this case, I read to 25. You do the math, 288 divided by 25. See how that works? 288 divided by 25. And that's 11%. And with the cover call, you have to pay 29. So it would be based on 29. And the 30 here is paying 525. The 35 is paying 375. Let's do that. 375 divided by 29. 12%. Oh, in this case, the call is still paying more, but the put is also just as good. The call is paying 12.93%. And then it dipped today, so you could have bought that same call back for cheaper, closed it out, and then waited for the next trade. That's a trade. That's trade and cover call. Okay, questions. Should I hold my position on IONQ? Alejo, should I hold my position on IONQ? I would. IONQ, quantum computers, is kind of the main game right now for a pure quantum computer company. It's probably a takeover target next year or two by a bigger company. So I would say, like, what are we at? $24. I just had the quote here on that. Here it is. This is today. 25.23. You guys can get in for 100 shares for $2,500 tomorrow morning. You can write the cover call. Let's look at the stock now. IONQ. Pull it up. So, starting tomorrow, if you want to do the cover call for December, I would wait till it swings back up. Maybe wait a few days. But just at this price here, December 20, which is 31 days, the 25, I would sell about the 27 and you get 292. Okay. IONQ, quantum computers, 25.38. And if you sell the 27, they're getting 292. 292 by 350. 292. Let's do the math on that. And if you wanted to sell the put, which is a similar situation, you only take the shares if they drop, right? I would sell the 25. I would sell the 23. I sell the 23.50 on the put. Call put 23.50 for what? For 281. Okay, so the put trade here is to sell the put 23.50 December, third week out, for 281. And the cover call would be to sell the 27 for 292. 27 strike for 292. Let's do the math, guys. Let's see. Let's do the call first, the math for, so you're getting 292 premium divided by the share price of 25.38, which is your investment, equals 11.5% return, which is a great return on the cover call. Yeah, I would, if you have the cover call going, it's especially good to have this trade. If you just have the shares and hoping it's going to go to the moon, that's more risky. I don't like that as much. We don't have all the check marks on this stock. It's a newer stock. Let's do the put, guys. That would be 281 for selling the put for the 23.50 strike. And then we're dividing that by a lower price, right? Because we take the shares at 23.50 or lower, divide by 23.50, and we're getting 11.9% return, just a little bit more, 11.95. So either way, whether you're doing the put or the call, you're getting 11 11.9 or 11.5% return per month, which is 110% return for the year if you're doing 10 covered calls or 10 naked puts. That's my strategy. Because why? Because I'm taking the risk out of it. If you have call options on this or shares, and you're hoping it goes to the moon, which it may go to 40, 60, 80. That would be great. But then do you sell? What do? Do you buy more? It's going to obviously be volatile, and you're not getting paid any money until you sell. So I like to take the risk out of it and write the cover call or the naked put. And in my teachings, I teach how to pay all your bills and retire in the stock market. And I want to talk about that tonight. Paying your bills with, for example, cover calls or naked puts. We're taking the risk out of it by getting the premium up front by doing those trades. In this case, it doesn't have to go to the moon. We can just kind of maintain price, and we're getting those premiums every month, cover call premiums every month. And then let me give you an example, okay? So let's say you have bills of $6,000, okay? Add up all your bills. Let's say you have $6,000 in bills. Now, your monthly bills, your mortgage, your food, your car note, perhaps, storage, your spending cash, Netflix, Starbucks. What you do is you take the money you want to make every month. So in this case, $6,000, right? And you divide that number by the percentage return of your cover calls or naked puts. So we take $6,000. This is just an arbitrary number. $6,000. Do this with me, guys. Divided by on the cover call, we're getting 11.5% return. Divided by 0.115. That's 11.5% return, which is our investment return. It's showing us that we're going to need $52,000, 173. So with $52,000, 173 at 11.5% return gives us $6,000 a month, guys. So if you have moderate, humble expenses, for example, you could, in theory, pay all your bills with $52,000. Now that's kind of, let me tell you why that's stretching it. A couple things. And I want to get to this, which is accounting, which is managing your money. If you make $6,000 in stocks, right, you really can't spend all the money, okay? This is why, because if you take 100% of the income you have, okay, you generally need to have 10% set aside to what? For savings. Write this down. I call this distribution of income. This is a note for people managing their own money, retiring, or managing your own investments. Put 100% at the top, okay? Now, 10% would be to savings, which is to say what? You want to be able to take out money. You want to have something to show for it, for all your hard work. If you're working a job, I want you guys to save 10%, okay? Same thing with stocks. If you have your stock market going, you're making some decent money, put 10% away, You can put it in gold coins or silver coins. That's something people do. You can put it in a savings account. But have something to show for it, because remember the story about the guy, my friend, who trades soybeans, or he traded soybeans for a little bit. He builds an account up to $1 million. He was so happy. He's on cloud 9. He's like, oh, God, I'm so happy. I got my account $1 million. He was doing great. Saw him like 9 months later. Poof. Lost it all. And he was his biggest regret. He didn't pay his mortgage. Okay, so 10% savings. Have something to show for it. When you have money, when you have your job, when you have your income, and you're doing your investments, when you're making money, put aside 10%. Okay, that's the first thing. Second thing is you're gonna have taxes. So next thing is to put 20% for taxes, which is to say that whether you're working a job or making money in stocks, you're expected to pay tax on your profits. So 10% is a good amount to put aside. You can have write-offs. It could be less, but it could also be more. But that's a good amount to put aside. And then 3, you have what I call tithing. I'm always putting back into my community. I'm always able to give something to people less fortunate. When I was growing up, we gave money to the church. Now you can give money to someone who's less fortunate, or to a like a Goodwill, or have money aside to help the poor, for example. And that would be tithing. So whether you give money to the church or just helping someone that's less fortunate, 10% tithing. And then the next one, we're going to have 10% to reinvest. So 10% is to save. Take it out of the account, put it in gold coins. 20% for taxes, take it out. 10% for tithing, help. When you're tithing, you're obligated to the universe. It's a gratitude, okay? And then 10% to reinvest. You always want your account for your investments to grow. So you're always going to try to build it up. You don't want to take too much money out, because then you won't have it to build your account. So I always put at least 10% back to let it grow. So 10% to reinvest. Reinvest in your account. And then that leaves 50%, guys. 50% is to live. You can spend 50. So when you make $6,000, you can only spend $3,000. Let's just be real, because you have expenses. You're going to have to manage your money properly. So here's my plan. I wrote it down. If you want to take this note, it helped me a lot decades ago. And so it's not actually $50,000 you need. You need double that amount. So if you want to make $6,000 a month, right, you can really only spend $3,000, right? So either you're going to double your amount here on the math, or you're going to have to only live off half, live off $3,000. In this case, you want to make $6,000 truly, which you want to spend $6,000 truly, you're going to have to double that figure. So the $52,173 is going to have to be double. So let's double that. 52,173 times 2. Because you can only spend half, right, what you make. So 104,000. So 104K, got you covered. Still, it's risky because, you know what, your value can come down. You know, you could have a stock that, you know, comes down more than you want. Maybe that'll lower your cover call return. So you might end up getting a little bit less, but that's one way to do it. Appreciate you. Thank you, guys. You guys, give me some. Oh, thank you for the likes. Appreciate you. I love those likes. If you guys gift, throw me a couple of cranes. I appreciate you. Stars or flowers, I'll take them. I can argue. If anybody wants to sub, it's only $5 a month. I take care of my subs first. You can come up here and ask questions. All right, questions. IONQ very volatile. Daniel Yoon. IONQ very volatile. Yes. So let's talk about a portfolio. You don't want to have just one position, right? So what I like to do is have a few dividend stocks. Let's say, McDonald's, MCD. Let's do Starbucks, SBUX. And let's do, how about Whitehorse Financial, WHF? Let's look at these, okay? Let's look at these. McDonald's, MCD. At least we have one customer from McDonald's. Trump likes McDonald's. All right, $2.91 a share. $2.91 a share. And what is that? A robust share price? Do you see how that just looks nicer? Like you guys, like in a stock market crash, okay, you know these companies can get cut in half. So if your stock is $300, cut that in half, it's still $150. These stocks that are $5, $10, $20, cut that in half, and it's like, $10, $5? It's just closer to zero. You do want a robust share price. You definitely do. And you're going to respect these companies more in the stock market crash when all these other stocks are getting canned. All right, so McDonald's pays a nice dividend. I want to show you. 242, 2.42% yield. Another one, let's look at Starbucks. Oh, and by the way, if you look at all these bells and whistles, it has a 5-year chart that's going up. Not like these other stocks we looked at earlier today. 5 years ago, McDonald's was 195. Now it's 290 something. So again, 100 points in 5 years, right? So it has the chart, has a 5-year chart that's going up. Check. Has a dividend. Check. Has a PE. What's the PE? PE just shows as making profit. 25 PE. Check. It has market cap, which is 210 billion. Check. I'd like to have 50 billion market cap. And these 2 billion market caps are so tiny, it's like you're basically investing in a house in Beverly Hills with these tiny market caps, which is very risky. McDonald's has stock splits, and it has it does not have a cover call. So actually, 1, 2, 3, 4, 5, 6. Out of 7 check marks, out of 7 criteria, it only has 6. So let me look. I don't think it has a cover call because it's going to pay you like 2%. Let's take a look. McDonald's. Usually, just hold it for the dividend. Just hold the shares. If the shares dip, you can buy more. If the stock market crashes, you can buy more. That's the theory behind it. That's the theory behind dividend stocks. You buy them when they dip, right? Okay, so McDonald's for next month is paying $291 cover call. So it's paying $6.35 at the $290. $295 is paying $395. $290. So you can sell the $295 cover call. $295, and then you're getting $395 by $415. Now, if it's $395 by $415, and you know you have the volume, by the way, McDonald's volume is 3 million, just so it's enough. You can put a limit order on this cover call. I would do limit order of $4, just 5 more points above the bid, which is $5 more. So you're gonna get $400. And let's do the math. $4 divided by investment at $291. 1.37%. So pretty underwhelming cover call. I'm gonna say probably pass on the cover call. It's better just to have the shares, get the dividend. Maybe they'll swing back up. It's down anyways because it got that E. coli breakout, and it was at 315, so it's kind of down from there, but it's maintaining at this point. So you could technically do the cover call for 1.37 a month, 13% a year. Not really. I mean, in that case, you might just want to hold the shares. The shares could go up more than that. That's why. But some people will do that cover call. And then Starbucks, SBUX. Starbucks Corporation. Ooh, $100 share. Starbucks is back to 100. If you guys look at the chart for Starbucks, let's say the year chart, you do long-term trading. It was at I have 98, and it went down, it dipped to 70, 72. Then it went back up to 95, now it's back up to 100. So when you see these great stocks dip, that's a buying opportunity. SBUX Starbucks is $100 today, 136. And then I want to show you the dividend on here. 248, almost the same as McDonald's, 248% yield. So that's something. You guys are going to respect dividend stocks when your stocks are crashing and the value's going down in a bad market, and these dividend stocks are coming in, the dividends coming in. That's when you're going to like these dividends the most. I know most of you guys don't care about dividends because it's not so exciting, but over time, stocks don't always go up, guys. We're in a bull market. We're having great returns, but it's not always going to be like this. So have some dividends. So who asked me the question about being volatile? Yes, I want you to have some dividends to fall back on. Starbucks, McDonald's, Whitehorse. Let's look at Whitehorse, WHF. WHF. This one, low share price, 1080. But look at this dividend. 14.5%. Hello. 14.5% dividend. So, in theory, if you want to have a balanced account, you probably want to have a nice portion of your account for dividends, at least maybe a third or a half. And the rest of your account you can have for covered calls for trading, okay? So, if you want to balance your portfolio to be safe, this number we talked about, getting $6,000 a month, right, with 104K, and spending half, right, because you're actually making $12,000 on that, spending half, you're probably going to need around double that again. You're probably going to need around 200K, so that way you can put dividends and only, let's say, 1/3 into covered calls, or 1/2 into covered calls, and 1/3 or 1/2 into dividends. This way you're balancing your account. You're not just having high, volatile, risky positions, but you're having some dividends to fall back on in case of a correction. If you guys know about beta, beta is the measurement of how much the stock moves. So if you have a low beta stock, then your stocks will be less volatile. And like a low beta stocks like Wall Mart. Walmart's a low beta stock. Let me pull up Walmart. WMT, write this down, low beta, right? Walmart is $85, $85.44. It's a low beta stock, which means it doesn't move that much. It's not so volatile. But look at the 5-year chart. It went from 39 to 85, so more than doubled in 5 years. That's what I like to see. A nice consistent increase. If you look at all these, it has all the check marks, except probably for the cover call. Cover call's probably going to be, well, hang on, it might have a cover call. Let's take a look. Walmart. I want to show you Walmart because, why? It has a tiny dividend, 1%. All right. Has a PE. PE is 43. Market cap, 670 billion. Volume is 25 million. Wow. Holy cow. Let's see if it has a cover call. It might actually. Let's take a look. Walmart might have all the check marks, guys. You know what Walmart does, right? 1.9 million employees. All right, December 20th. The shares are 85.44. And 253, 280. So if you sell the 86, we sell the 86.67. That's weird. I guess it would have split. 86.67 strike is paying 189. Let's see how much that is. Do the math for me, guys. 189 on the cover call for Walmart. For selling the 86.67. For buying the shares at 85.44. Divided by 85.44. 2.2% return. Almost enough. I mean, I don't mind getting 2% a month on a Walmart stock that's really stable as hell. 22% a year, and probably with a dividend. It's not too bad. I would probably give that one all the check marks. Don't have a problem. All right, guys, appreciate you. I'm gonna look at some more questions. Can you do ACHR? Awful maiden plays. Can you do AC? Welcome, Awful. Appreciate you. I saw you in the last live. Welcome back. Can you do ACHR? Let's take a look. ACHR stock. Don't be upset if I tell you it's trash. Anchor Aviation. Oh, 441. Ouch. Penny stock. Dude, don't do this to me. Dude, we have standards here. All right, let me read it for you.
Updated. 1:34:53 a.m. Eastern Time, November 19th. 2. Business Summary. Archer Aviation Incorporated, together with its subsidiaries, engages in designs, develops, and operates electric vertical takeoff and landing aircraft for use in urban air mobility. The company was formerly known as Atlas Crest Investment Corp. And changed its name to Archer Aviation Incorporated. Read more website www.archer.com. Share profile. Market cap. Micro cap $1.88 shares.
Okay, so they make airplane parts. Market cap 1.8 billion. Tiny. You obviously want to have about 50 billion, guys, to have a real stock. But okay, it's small. It's a penny stock. It has a volume 20 million. Now, the funny thing about penny stocks, guys, is some of these penny stocks have a covered call. Let's take a look. I'm not going to recommend this one just because of the share price, but it has some things that are interesting. Okay, like for example, when you get a share price with this low, with this kind of volume, I know there's probably a cover call. Let's take a look. Buy the shares here at 441. Go out next month, agree to sell them for, let's say, 5. Oh, 450, there you go, 450. So the sell of 450 for 30 cents. Take a look. Do the math with me, guys. 30 cents. 30 cents divided by an investment of 441. 6.8% return. Hey, not bad. You know what you could do? It says 30 cents by 40 cents, right? So what you could do, put a limit order, let's say 33 cents. Probably it'll take it. They'll probably take that. Wait about 10 minutes because of all that volume. And if you want to do the math on that, 0.33 divided by 4.41 equals, now we're at 7.48%, guys. 7.48%, or 75% per year. Why not? And the put is a similar situation. You can sell the $40 put between 15 and 25 cents. And if it goes down to $4 or below, you pick it up. I would make a limit order of 20 cents on that. So let's do that. 20 cents on the put. Agree to buy it at $4 divided by 4. 5% return on the put. Why not? I know it doesn't have the check mark, so I'm going to have to say no on that one. But if you have the stock, you like the stock, you know, maybe you're going to get cover call money. Unfortunately, the bad news is a lot of these stocks, you guys are holding on to them. You want them to go to the moon. You have them for 3 months, 6 months, a year, 2 years. And they don't perform because they have no profits. They have no criteria. They don't have the kind of long-term investors that aren't investing in long-term companies. So the shares don't really go anywhere. They don't go up like you want them to. Oh, it has a 5-year chart, but 5 years ago it was $10. So it's down in 5 years. Okay, or actually down in 3 years. So the stock's going the wrong way. I know it doesn't have a PE. PE dash 2 billion. These tiny companies, some of these companies aren't going to last, to be honest with you. They're going to evaporate. So that's why you want a robust share price. It's just farther away from zero. That's how I look at it. Thanks for that. Anyways. UAL puts at $88. Wyven Gary. UAL puts at $88. Isn't that a big company? UAL? United Airlines? Oh. United Airlines. Airlines always have problems, man. Are you buying the put or selling the put? I'm assuming you're buying the put. You think it's going to go down? 5 years ago, it was the same price, $88. It hasn't made any money in 5 years. That's the bad part. And it was actually down. Now it's going up. Business summary, United Airline Holdings.
AP $20. Business summary, United Airlines Holdings Incorporated, through its subsidiaries, provides air transportation services in North America, Asia, Europe, Africa, the Pacific, the Middle East, and Latin America. The company transports people and cargo through its mainline and regional fleets. Read more website www.united.com. Share profile. Market cap. The company transports people and cargo through its mainline and regional fleets. It also offers catering, ground handling, flight academy, and maintenance services for third parties. The company was formerly known as United Continental Holdings Incorporated and changed its name to United Airlines Holdings Incorporated in June 2019. United Airlines Holdings Incorporated was incorporated in 1968 and is headquartered in Chicago, Illinois. Read less website w.
So, like, for example, an airline stock, why it's not good is because they can only do so much. This company's been going since 68, and it's kind of just, barely hanging on. There's a lot of competition in airlines, for example. There's not that much profit, there's all kinds of regulation, they have lawsuits, just like any other company. So it's not like a company like Netflix who's like taking over the world, It's not a company like Amazon who's just basically taking over the world. It's kind of like an old brick and mortar company that's just basically trucking along, So yeah, you probably will do well on those 88 puts. If you look at like what these companies have to offer, I want to put a 12 criteria on my criteria list, and the 12 criteria is how relevant is the service or the product. And for United Airlines, I'm going to say it is not relevant. So we'll just do an X for that, right? If I rate this company, it has 4 million volume, so it has the volume, check. It does not have a 5-year chart because it was the same price 5 years ago. The price is basically the same. Market cap 30 billion, so it's just under the 50 billion, so that's an X. PE, it does have a PE of 10, so that's a check mark. Let's look and see if it has a dividend. I don't see a dividend on it. If it's an airline company, it should pay a dividend if you think about it, but it doesn't. So no dividend. I doubt there's stock splits. Let's just check, guys. Write this down, guys. StockSplitHistory.com. And my criteria is that the stock has stock splits. Stock splits, I think, are an example of how you get exponential growth over time. All the great companies have great stock splits: Microsoft, Starbucks, Wall Mart, Coca-Cola, UAL. You put the stock in the StockSplitHistory.com box, it'll tell you if it has splits. Oh no, they're trying to sell me, guys. They're trying to sell me. Guys, just get the likes up a little more. Get some activity in here while I'm looking this up for you. Appreciate you. They want me to sign their email. Let me try again. They try to get you with the how do you put your email? Somebody's on StockSplitHistory.com. Can you just check if this has stock splits? Just get me to check all these little check marks. Yeah, I never liked the airlines. Okay, here we are. We're back, guys. Sorry about that. UAL. Nothing's free anymore. Everything they want you to sign up for everything. Has had 2 stock splits. Okay, in 94 and 96. You see how that works? In 1994, that's when they were doing well. So it does have stock splits. 1, 2, 3, 4, 5, 6, 7. What did I miss? Can we get 8? Can we get 8? Oh, cover call. I'm going to get a cover call just to check it. UAL. Click on options. Click on next month. Every month you guys can write the cover call. In November, you write December. December, you write January. Start with the monthly. Some of you guys are doing weekly cover calls, which I don't like doing that, but it pays more, a little more. Oh, hello. Hang on. Hello. There's a cover call on this, guys. 90 share price, 90.48 on UA Airlines. If you sell the 95, which is 5 points higher, we sell the 94, sell the 93 for 370. Let's do that. Sell the 93 for 370. So take $9,000, guys. Buy the shares here for 90.48. Okay. Write the 93 cover call for 370. 370 by 385. It's nice and tight. A lot of volume. Let's do the math, guys. 370 divided by 93. No, 90.48. Your investment, 90.48. 4% on the cover call. Not bad. I can't hate it. 40% return per year. So if it has a cover call, it gives it 1, 2, 3, 4. So 4 out of 8 check marks. I'm not hating it. Let's give it like a C grade, like a barely pass, just because of the cover call. Thank you, guys. More questions. Have you ever traded crypto? Social Monster. Have ever traded crypto? I don't like crypto. I specialize in stocks. We're doing stock market. I do kind of like how Bitcoin works. I think Bitcoin will be prominent. I think it'll break 100K this year. But I don't really do crypto. You'll have to ask a specialist who does that. We're just doing stocks. What are you trading? Social Master. Right now, we're looking at some good stocks. UAL, I don't like UAL, but it does get 4 out of 8 check marks. I don't like it because it's an airline, but you could do a cover call on it. We looked at dividend stocks, Wall Mart, Starbucks, McDonald's, White Horse Financial, which is going to bounce your account. We looked at stocks that are giving us a high return and probably will go higher. IONQ, Quantum Computers. Another one, OKLO and SMR. High return on the cover call. Higher risk, right? High risk, high return. Let me just throw some stocks at you guys. In case you guys don't know what stocks I'm into, I'm going to give you, 5 tonight. NVDA. And I'm going to give you Netflix, NFLX. Those have good cover calls. And I'll give you Palantir, PLTR. I didn't remember how Palantir did today. Let me look it up. PLTR. It was $60. Looks like it was down today, down 4. That could be like a buy opportunity if you buy the dip. So Palantir's at 61 at the close. And then, like I said, have some dividends. So let's say Starbucks and McDonald's and White Horse Financial. So you got 3 cover call stocks, 3 dividends. And these other stocks I'm talking about, like IONQ, are just very risky but high paying cover call stocks. And I want you to balance your account. Don't have only that position. We have something to fall back on in case we get a correction. I want you guys to get your account wiped out. Okay, so answer your question. VKTX, awful, man. I'm gonna write this down. V, because I want to get to someone else's questions. VKTX. I'm gonna get back to you on that, okay? I know other people have questions. I'm wrapping back. Thank you guys for your questions. Appreciate you. Teaching people the market is good is godsend. Most people don't care to learn, but it's not easy for Big Mac. Teaching people the market is a godsend. Thank you, Big Mac. Appreciate you. Yeah, I had the good fortune to get into stocks early on in my life, and I was able to go to some of these shareholder meetings before the COVID, so they met in person. Now most of them are just online meetings, and all white dudes, a couple Asians, but mostly all white dudes, which is to say that very few young people are in the market, and I want to say very few minorities, unfortunately. So yeah, a lot of people don't do investments. They end up working, they end up going to school, getting a job, maybe some college, working 40 hours for 40 years, and retiring, and then having to work back at Wall Mart to collect receipts at the exit because they got no money. So what is your financial plan, guys? I'm showing you some stocks, some trades. Questions? Thank you, Big Mac. Is ACHR. ACHR was not a good stock to buy, but I think it had a great cover call. Did it? Were you watching? By the way, if you miss my live, I'm going to post the whole thing on my YouTube. So go to YouTube. It's on my profile. And I'm going to post an hour of it. I'll have to cut it down. I usually go over an hour. I'm going to post an hour of it on my TikTok. So you can look at my TikTok profile. You can see the hour lives I do every Monday night. Also, one other random night during the week. You guys that are here, appreciate you. That came back, thank you. Subs, appreciate you. Snap, 12 call, 12-6, Snap, Snapchat. There's two stocks here, Snapchat and Bonk. Brian, I see your question, Bonk, and then Snap. I can look at Bonk and Snapchat. BONK, and then Snap. Back in the day, I was in Snapchat for a little bit, but it was just so volatile. I left Snap. What do the kids say? Can I get your Snapchat? All right, Snapchat's 10.54. So another stock has come down. It was much higher when I was in it. Equity, 5-year chart. Now I know this one has a 5-year chart, but it was about $15 5 years ago. So it's 10. So it was all the way up to 74 back before the COVID, and then it went down like most stocks did, and it did not come back up yet. But it's showing 10.54, so does not get the share price. I'm going to rate Snapchat now. SNAP. $10.54. So that's a X. 5-year chart, X. Lost money in 5 years. Volume. It has a volume, 34 million. Check mark. I know it has a lost money in 5 years. Volume. It has a volume, 34 million. Check mark. I know it has a cover call, so let's do the cover call. Snapchat. Buy the shares here, $10.54. $1,000. Can't beat that. Click on options. Go to 1 month out. December 20. And you can probably sell the 11 or the 12. Oh, look. The 11's only paying 43 cents. How much is that? Buy the shares here at $10.54 and agree to sell the 11 cover call for 43 cents. Or $43 for every 100 shares. That's how that works. Because a cover call is based on one contract of 100 shares. So when I say 43 cents, that's $43 you're getting. So a $1,000 investment gets you $43 a month. Does that sound about right? 0.43. So by 10, the share price of 10.54 equals 4.7% return on the cover call. Not bad. I don't like the stock, but if you do the cover call, I won't be mad at you. But I don't think this one has all the bells and whistles we need. I'm gonna guess there's no PE, right? Am I right? PE on Snapchat. No PE. Check mark. X. Market cap. 18 billion. X. Too small. So it has a cover call and it has a volume. Again, I'm pretty sure it doesn't have stock splits. SNAP. SNAP. StockSplitHistory.com has 0 stock splits, so no stock splits. It's a lot going for him. I'm gonna have to pass on this one. I get 2 check marks out of 6. What am I missing? I know you want the stock to come back, right? We don't know if it's gonna come back. It's not stellar. It's not premier. I'll play the business summary for you.
19 a.m. Eastern Time, November 19th, 2024.
Against going haywire. Snapchat operates a technology company in North America, Europe, and international. The company offers Snapchat and visual messaging applications with various tabs, such as camera, visual messaging, Snap Map, Stories, and Spotlight that enable people to communicate visually through short videos and images. It also provides spectacles and eyewear products. They sell glasses, guys. Hey, that connects with Snapchat that captures photos and videos from a human perspective, and advertising products, including AR ads, Snap ads, and single image or video ads, collection ads. Okay, so basically it's a Snapchat app, basically. Yeah, I'm gonna have to pass on it. Thank you, though. Bonk, B-O-N-K. What is that? B-O-N-K. I don't have that stock. Maybe I got that symbol wrong. All right, guys, questions? Thank you for joining, guys. We're going to wrap up soon. Thank you for the likes. Appreciate that. You guys want to donate me some gifts? I take cranes and flowers and stars. I won't say no. All right, questions. You guys have been questions for me. I can wrap back only so far. We looked at some stocks for you. I showed you some cover calls, some high return cover calls, and some low return cover calls. Talked about making puts a little bit. Talked about some dividends. Talked about balancing your account. Talked about making you some consistent money. Talked about the math to retire you in the stock market. If you need $6,000, you really need to make about $200K. You gotta have about $200K, and you're gonna get about $6,000 to spend, and you'll have $6,000 for other reasons: taxes, savings. Final questions, guys. If you want to give me a sub, it's only $5 a month. I take care of my subs first. You subs know. You also come up here, ask questions, teach you these trades. You can DM me. You guys, when you DM me, just one question at a time, please. Appreciate you. Well, we talked about some good stocks. I like NVDA, Netflix, Palantir. Those are cover call stocks. Talked about some dividends, Starbucks, McDonald's, Whitehorse Financial. We mentioned some other higher risk stocks, IONQ, which is quantum computers, which is a takeover target, probably. We talked about OKLO, and SMR. were good covered call returns, 13%, 11%. Thank you for joining, guys. Appreciate you. Let me see if I have any pictures I'll show you. I was showing you stocks that I watch. I'll take some pictures. I only focus on 10 stocks for our core 10, but I did look at the market. Today was kind of flat. Oh, this what happened. This happened. Super microcomputer. I'm glad I found this one. So super microcomputer is having problems. SMCI. This is another one, guys. Symbol SMCI. Let's do this one, then we'll wrap up. Okay. Little nugget for you. All right. SMCI. They were having trouble. They lost their auditor. And they got another auditor, and guess what? The shares went up $8 and after hours to $30. It was 21. It came all the way down, got beat to hell. And I was telling you guys, there's probably value there. Okay. So I'm not going to do all the check marks because we don't need to do that. I'll do that next week, but I will say it has a great cover call. Let's take a look. We buy the shares here at $30, or actually, it's tough because it's showing a $21 price on the close, and $30 not till after hours. But let me do the cover call from $21. Okay, here we go. Options. Okay. All right. December 20th. So the shares are $21 as of close, and they're paying $4.85 at the money. So you could have bought the shares for $21 earlier today, and let's say I would have sold the 20. I would have sold the 24. I would have sold the 24. So $3 higher for $3.70 cover call. Okay, and let's do the math on that. 3.7. What's the cents on this one? 30.11. 3.7 divided by 3. 11, which is actually no, cancel that. Divided by $21. 21.54. 21.54 equals 17% return. Hello, 17% return on the cover call, and tomorrow it'll probably come down maybe 15%. But if you're getting anywhere north of 10% on this cover call, it's hard to pass that up. All you need to do is have 10 cover calls in a year, and you're gonna have 100% return or more. So take a look at that SMCI, super microcomputer. They also have an artificial intelligence department. They have a quantum computer department. And they're probably also a takeover target, to be honest with you. So they did that today. There's some news on that after hours. They're not going to be delisted. They're going to comply with the NASDAQ rules. That's the plan. We don't know. We'll see. All right, guys. Thank you. Appreciate you. I'll be back later this week on a random day. Send me a DM if you have any questions. Just one question at a time, please. Godric out. Good night.